Good afternoon, and thank you, Perry, for joining us once again for this webinar titled Business Plan for the Planet. I would also like to thank representatives from HSBC Bank. We have Ms. Joyce Grech, Head of Commercial Banking, Ms. Sabrine Rahman, Head of Sustainability Europe, Middle East and North Africa. We have Ms. Sibel Sirmagul, Head of Product Propositions Europe. It's really lovely having you join us for today's webinar again. And Mr. Hugh R. Blacklock, Senior Manager of Transaction Risk Management. So during today's session, we will focus on the commitment the HSBC has on sustainability. And in fact, we'd like to start off by launching a poll, which is asking the question of whether you're already incorporating sustainability into your business model. So if you just give me a few seconds for me to launch the poll, I would appreciate if you took some time to answer it. We will be launching the results later on. So in the meantime, I would like to ask you to make use of our Q&A function and not the chat that we have. So it's just that button below. And I would like to introduce Perit David Schwab for his address. Thank you.
Thank you, Julia, for the intro. I wish to welcome you all. I need to start off by thanking Sabrine, Joyce, Hugh, and Sybil for joining us in this webinar this afternoon, at least this part of the world. For those of you joining us other parts of the world, good day, good to see you. I do not wish to take lots of any time, but I have to admit that I am really looking forward to this event on account of the fact, well, firstly, that I am personally very passionate about climate change, but rather the opportunities that climate change brings about. Certainly the expert panelists that we have today and the HSBC leading this within the business community is tantamount to where all this is heading. I am very, very enriched, if you like, and happy to see that the world is, and Malta, and in this case, the Chamber of Commerce together with HSBC, is looking at how to tangibly reap the benefits of the actions that climate change dictates on us. And that probably implies, I guess, some changes that we will have to champion in our personal lives, in our things that we do on a day-to-day basis, but also on how we will restructure our business and what values and what ambitions our businesses should really be focusing on to be able to benefit from these changes that lie ahead of us. Just before this webinar started, we were talking about COVID, of course. I'm sure we all know that we're going through this particular pandemic. But actually, besides all the negatives that this pandemic has brought about, certainly a good realization that the status quo is not on, and the need for change is apt and is timely. And the changes needs to be driven by what we have been learning and maybe have become more aware of during this last year or so. Certainly, the need for climate response in the form of restoration, I mean to say that was the word I was looking for, climate restoration and the ability therefore to restore all the undoing that we have done is, yes, a planet objective, but certainly is going to be driven by business. And every business, one by one, through a business plan and business objectives that are driven by these core objectives. Certainly, bit by bit, country by country, continent by continent, we get a planet, and that's how we hope to see change with the ability, therefore, of reaping the benefits even in our economy. So I look forward to experts that are way more intriguing and more influential and more informative than I. So with that, I pass the mic back on, the proverbial mic back on to Julia, I guess. So looking forward.
Thank you so much, Perit Schwab. Now, if you just give me a moment of your time, I'd like to share a video that was prepared by HSBC. So if you could bear with me for 1 second, I'm just going to start it. Thank you very much.
We all know what's going on. Millions of voices tell us every day. What we need more than ever is action. We need a game plan. We need ideas that deliver a future of sustained prosperity for us all. We need a business plan for the planet. Because business does. Because business solves problems. Business innovates because business acts globally. Business knows the meaning of now. Business has an eye on the future. At HSBC, we're committing between $750 billion and $1 trillion to drive sustainable transitions over the next 9 years and to support our clients all over the planet and their networks to thrive in a low-carbon economy. HSBC's target is for our own operations and supply chain to reach net zero by 2030 and to help all of our customers achieve the same goal by 2050. We believe that business can be part of the solution. If you do too, join us. Visit business.hsbc.com/BPFP.
So you all saw the video that was prepared by HSBC, and I would like to pass on the mic to Ms. Grech for her short intro. Thank you.
Thank you, Julia, and thanks again, everyone, for joining. I'm really pleased, like David, I'm very passionate about the subject, so I'm very pleased that we have a good number of participants with us here today. This is the start of a journey for us as we begin a conversation on this very important subject with the local business community. So thanks to the Chamber for organizing this and to David for being with us today. And I know how passionate you are because I've heard you speak at other events on the subject. Obviously, I'd also like to thank my HSBC colleagues for accepting the invitation to speak today. They're all three are experts in their field and have a lot of particularly insightful information to share with the people on the call. So I hope that all of you will find this very useful. Many of you will be aware that the HSBC Group CEO, Noel Quinn, recently announced very, very bold and ambitious targets and commitments in the space, which were explained very briefly in the video, but you'll hear more about as we go along today with our what we have planned for you. Recently, our global head of sustainable finance said, "Sustainable finance is key to our long-term strategy. We are at the start of a journey and are committed to being the leading bank in financing the transition to a sustainable, low-carbon economy." Locally here in Malta, we might be small, but we're still very prepared to embrace this commitment and look forward to do our part. David already touched upon this. The pandemic has presented a landmark opportunity to rebuild for better, more inclusive growth and sustainable prosperity. While it undoubtedly brought about various difficulties to businesses and to the economies around the world, there are opportunities. And here I'd like to reference the Navigator report, which was issued by HSBC. This collects responses from 10,000 businesses operating around the world. And for those who are interested, it's available on our website, but I'll just pick a bit of information from it. So one of the key trends to emerge from this in the latest run of this study is that the vast majority of businesses now view sustainability as a driver for growth post-pandemic. In fact, 81% of companies in Europe expect sales to grow over the next year from a greater focus on sustainability. So these businesses now see recovery efforts from the pandemic as an opportunity to make their operations more environmentally sustainable. Closer to home, locally, the National Energy and Climate Plan has been presented. And it brings the issues relating to climate change to the forefront of the agenda. Also at the European level, there's a clear drive towards carbon neutrality by 2050. And the European Commission acknowledges that while the actions we're taking are helping the region to be on track for its 2030 emission targets, we definitely need to do more to reach carbon neutrality by 2050. More ambitious contribution by all involved. So this isn't something for governments, this is something for everyone to play their part in. in. So in view of this increased ambition, the Commission is expected to present proposals for the European Green Deal. So Malta has also started the journey, and you'll soon see a number of initiatives for business, which us as HSBC will be supporting also through our CSR arm. So today's webinar, the main purpose is first of all to evidence the need for action. But we also aim to provide the participants with some information on what actions they can take now and how we can support them to identify the opportunities and overcome the challenges to implementation, and showing them how we can partner with them on their journey to a more sustainable future. We believe that the planetary ESG challenges will be solved when we make business part of the solution, not the problem. So business has the skills, as you've heard in the video, it has the operating system, the resources to make the changes that we all need. Together, business and their networks around the world can mobilize to create the largest planetary change program. So us at HSBC, we've started the journey, and we're now calling on our partners everywhere to get involved. That's it from me, and I'd like to hand over to Sabrine. Over to you. Thanks, Sabrine.
Thanks very much, Joyce, and thank you very much for having me. This is my first time actually engaging with colleagues and a wider audience in Malta, so I'm incredibly excited. If you could please show the slides, Julia, if that's okay, the first slide. Thank you. So what I wanted to start off with is I think the acknowledgement that all of us here realize that the world can no longer operate business as usual, and there needs to be fundamental changes in how we produce, in how we consume, and how we finance. And this is why over the last decade, there's been even more traction towards establishing a cohesive set of goals, standards, and disclosure agreements, such as the Paris Agreement and the Sustainable Development Goals, to really help promote the sustainable growth mindset, as well as integrating sustainability risk management into business as usual. Now, over the last year, this has obviously been exacerbated, this journey that we've all been on. And with the volatility that we've seen, we've also seen investor appetites changing, where they are now rewarding organizations that have sound ESG and sustainability integration and are actively divesting from organizations who don't. But there are also very, very clear commercial and reputational gains that we can have as organizations if we are sustainable and responsible. So ESG and sustainability strategies are critical to long-term business success. And COVID and its impacts have not only transformed societal norms and how we interact, but also have exacerbated the social and economic inequality in many of our communities. But it's also heightened the demands for companies to become accountable to all of their stakeholders, not just their shareholders. And financial figures alone no longer tell the full story of a company. And I think the pandemic has also cast a huge shadow and spotlight on what it means around corporate resilience and purpose. And I think this is just the beginning. Ahead of us are so many other megatrends that we will face as a global community, whether it's the climate crisis, rapidly changing demographics, emerging innovations in technology, and other forces, which will continue to reshape the expectations of the business community. And if we are to sustain and thrive and adapt to this new era, ESG has to become a strategic business imperative. If we move to the next slide, please, Julia. Thank you. And that's really the background under which HSBC set out our ambitious climate and sustainability plans to really understand what can we do as an organization to become sustainable, to become resilient, and to help play our part in designing an inclusive future. And we made this commitment towards the end of last year to really become a net zero aligned organization. And fundamentally, we're doing this because we can see that faster action is needed to really accelerate the transition to a net zero economy, and if we are to limit the impacts of climate change. So for us as an organization, it is a commercial priority, but it's also a huge focus of the philanthropic work that we're doing globally. And we're looking to move towards this agenda through three main pillars. So not only becoming a net zero bank in our operations and financing, but also to support our customers through product, services, and advisory, and using our network, expertise, and influence to help unlock new climate solutions. In addition to helping mobilize private capital flows to emerging areas such as clean tech innovation. So under these three pillars that you can see on the slide, we also have enablers to help us achieve that. And our hope is that through the careful focus and collaboration, that we'll be able to not only pivot our organization, but also those organizations in our ecosystem to apply more of a sustainability focus in how they operate, how they invest, and how they grow. So applying a climate lens to our financing helps us not only support our business, but also our clients, which you heard about in the video. And we're very cognizant that not one size will fit all. There are individual and regional challenges. I'm based in the Middle East, so I know all about that. But the reality is that we're facing collectively the same problem. We all want to be a part of a movement where businesses are a viable and a critical part of the solution. And as one of the world's largest banks, we think that we can play our role effectively and help our more than 1.5 million customers across the world to transition along with us. And that's what we hope that the Business Plan for the Planet helps us do. We want to spark conversation, we want to spark collaboration, and we want to collectively move towards the same goal. So that's it from me. I'll hand over to Julia.
Thank you for that intervention, Ms. Raham. What I would like to do now is really quickly go to the presentation of the results of the polls, just so it serves as an introduction to the panel discussion that we will be having shortly. So if you could just bear with me just for me to share the presentation, please. So the results, so we had asked the question whether businesses are incorporating sustainability within their model. 61% said yes, that they have already started. 30% said no, but they are considering it within the next 12 months. 9% said no, but I will do so in the next 24 months. And no one said that they are not interested at all. So that is obviously very, very positive, even for the sake of this webinar. So without further ado, I would like to reintroduce into the panel Ms. Rahman and Ms. Grech, and also introduce Mr. Blacklock and Ms. Sirma Gould for the panel discussion. Might I remind everyone to please use the Q&A function, not the chat, so that all the panelists can see your questions and answer accordingly. So just to start off, I would like to pose this question. So considering we're in a pandemic, we're already in a difficult situation. Why should I think about sustainability? What do I have to do differently? And I would like to first take Ms. Rahman to take the global aspect of this question, and I would like to refer the national side to Ms. Grech. Perhaps you can provide a more national aspect to that. So Ms. Rahman, if you can start, please.
Sure. Of course, it is a difficult time, but if I can be completely honest, and maybe I am biased, but I don't think sustainability or ESG really is an option anymore. It has been proven time and time again that it is critical to any organization, and it's one of the biggest indicators to the strengths and the weaknesses of a company. It is a viable risk management tool, and if integrated and implemented properly, it can be a source of cost savings, it can be a competitive advantage, as well as I mentioned before, building organizational resilience and loyalty from your clients, customers, as well as your employees. I know that it is difficult, especially for SMEs and smaller companies who may not have dedicated resources, but I think we can all do something, you know, whether it's applying that lens to how you produce, how you procure, can make a really substantial difference. It's about thinking through things like your supply chain, for example. Are you procuring many of the items that you need locally? That's enhancing the resilience of your organization. We've seen through the pandemic, organizations that had large international supply chains often saw interruptions. So it's really thinking about long-term, medium-term, think about where the global economy is going and what can you do. But I think absolutely it is an imperative. It's what every investor will ask. It's what every client will base their decisions on going forward. And I think it's absolutely critical how we use the next few months as we restart economies to ensure that it's integrated thoughtfully going forward.
Yeah, thanks. That's an interesting question, Julia. And actually, I fully agree with Sabrine. And what I would add is that I think that businesses will soon be under pressure to become more sustainable and to show what they're doing in becoming more sustainable. And the pressure will come from various sources. So it will come from consumers. As a consumer personally, and I know that consumers are beginning to think in this way, they're becoming increasingly aware of the need for action to be taken to ensure a more sustainable future. They'll be expecting businesses to evidence their contribution, and they'll make choices as consumers depending on what they see. In addition, and I think this is very important for local businesses who might think I'm small, you know, the consumer doesn't really see me because it sees my suppliers more than they see me because I just import something from a supplier. But I think these companies with the overseas companies with which these local businesses trade will have their own ESG programs and will need to review their supply chains and so that they ensure that their own sustainability goals are met. So those local businesses who deal with multinationals in particular, or with large companies which are more advanced in these initiatives, they need to make sure that they future-proof their business, because ultimately this is what they'll be doing. There will likely be government action as well in many jurisdictions and around building sustainability practice in business operations. And going back to the Navigator research, which I referenced in the opening remarks, there were some interesting findings from that, which I thought I'd share because they're particularly interesting for businesses to think about. So the vast majority of companies surveyed, 86%, from the optimist to the pessimist, they think that efforts to boost their sustainability performance will help increase sales. So that's no joke, almost 90%. 3 and 4 have set environmental, social, and corporate governance targets with the greatest focus on environmental and social goals. And this is up around 10% from the previous survey. So more and more companies are building sustainability into their plans. And there is very little sign that companies will be foregoing investment. On the contrary, they're prioritizing in the post-COVID recovery on digitization and sustainability. So firms are prepared to invest now to deliver value in the longer term. Local firms will need to keep up with these trends, given the interconnectedness of the world that we operate in nowadays. Otherwise, they'll be left behind.
If I just may add to that just a small part, we all are aware of sustainable industry and its priority for the Green Deal, and as Ms. Grech has rightfully mentioned, digitalization in order to increase competitiveness is a #1 goal, and it's important for it to be integrated. So I'm just moving on to the next question. That now that we're mentioning sustainable industry, let's take the scenario that we have a manufacturing company. And what does sustainability actually mean for this company? I would think Mr. Blacklock can take that one.
Thanks, Julia, and hello everyone. It's really great to be here this afternoon. So, what does sustainability mean? Well, it's usually defined as meeting the needs of the present without compromising the ability of future generations to meet their needs. So clearly what that means for a particular company, a manufacturing company or any other company, will depend on its current circumstances, the business model, the strategy that they already have for the future, and to an extent the business culture, and possibly the values of the wider stakeholder community around that business. So to address that, really there's three key questions. What are the most significant sustainability related risks and opportunities facing your company and its industry? How exposed is this company to those risks or opportunities? And then but finally, how well is the company actually addressing and managing those risks and opportunities? So the poll we just did, 61% of you are already starting to address those questions, and that's fantastic. I guess for perhaps the smaller companies who are just starting to consider these questions, there's a few factors to consider in turn. Sustainability is normally thought of in terms of environmental, social and governance factors. Environmental factors will include things like climate change, natural capital, pollution and waste, and you can drill into these further. So natural capital will cover things like water stress, biodiversity, sourcing of raw materials, and then social factors will perhaps obviously cover things like health and safety in the workplace, labour management, product safety, but also things like privacy and data security, relationships with the wider community. Governance factors will include things like tax transparency, the ownership and the control of the business, board composition, and also the impact of outside regulation. The next thing to do really is to consider how each of these factors is material to the business. So clearly electronic waste will be an important issue to an electronics manufacturer, whereas a paper manufacturer will be more interested in, for example, raw material sourcing. And then there's a number of ways you can analyze each of these factors. So perhaps an obvious one is how immediate or how probable an issue is versus the size of that impact. And you should consider the complexity of the issue, whether there's any physical limitations on how innovation or technology can help with this factor. What's most importantly, the ability of the company itself to ensure that its employees can comply with the management action, the strategy to manage this. As we've touched on, a lot of companies are not just looking at their own operations, but they're looking at the sustainability performance of their upstream suppliers, the downstream customers, their other partners, and to work together. We've seen that a kind of a relationship approach to these issues with your partners is a really important way to succeed. You should also consider management's ability to develop policies, management system, performance indicators that cover these factors. And that's really a very quick overview of how you can identify and prioritize the sustainability issues that mean most to your company. Clearly, you want to weight this, so a large issue that you're already managing well will carry less weight in your strategic development processes than say a medium-sized issue where you haven't yet taken steps to address this and so on. This approach it sounds simplistic, but it's a very good place to start if you haven't already started thinking in depth about this. Most ESG rating agencies, most consultancies will take this approach. A lot of them now make a lot of their reports freely available online, so you can benchmark your company against other companies in your industry. As an example, MSCI, which is one of the leading ESG ratings agencies, has quite a helpful online tool that gives different sustainability factors and their impacts for around 150 different business sectors. So no matter what sort of manufacturer you are or other type of business, you can look at how your sector is addressing these issues and what they're doing to change the way they perform.
Okay, thank you, Hugh. We have another question. Will considering sustainable options save me money? Assuming this is a trade finance question. So, Mr. Magul, please.
Sure, thank you. Thanks, Julia, and really glad to be back again. I'm actually very pleased to see the poll results. It's really amazing. If you include the next 12 months, we're talking about 90% of the responses were this is critical area, which is really brilliant. The short answer to this question is yes, absolutely. And I want to say that this is actually a common question that we come across. Many businesses are actually concerned with the cost of the process. Some corporates may be unwilling, across the globe to commit to costs that may not yield an immediate benefit. At this point, I think it's really important to remember the hidden cost of the ESG risk. I think poor ESG practices will levy their own toll on the business, if not now, certainly in the future. Increasing regulatory enforcements require businesses to undergo a fundamental transformation, and this is happening at a full speed and scale. Banks do have a very important and intermediary role in tackling this challenge and to support businesses into this transition to a more sustainable business model. Simply put, businesses who are investing now on their ESG agenda will benefit in the future when it comes to their financing costs if they are significantly behind this transitioning curve. It's not only the banks actually, but shareholders, consumers, and society. Everybody wants to engage with businesses who have improved their sustainable practices. So the cost associated with regulatory enforcement will be higher if deliverables are delayed. So like the previous panelists have said, we have actually moved from nice to have to must have. It is really integral right now on how businesses are operating and across all sectors. Return on investment is not just in financial terms, but it also measured through impact on climate, society, and the natural ecosystems which we all depend on. Companies are responding more to rising expectations and demands of customers, shareholders, and society. I want to bring this to life with an example of a key area for investments to save. I think we have variety of sectors today and buyers, suppliers. So we have players across the supply chain finance, which I think this could be very relevant. ESG agenda runs actually well beyond integrating sustainable practices into own activities to encompassing the behavior of suppliers as well. The carbon footprint of procurement and supply chain is massive, and it's far beyond own local carbon footprint of a company who is actually, producing and manufacturing. Supply chains therefore create far more social and environmental costs than its own operations. So encouraging suppliers to change their behavior, of course, is a bit of a challenge. SME suppliers, especially in emerging markets, may have other more immediate issues to deal with and may object to the extra effort required today for an environmental or social benefit in the near future. I think the way to manage this, and I think it's kind of this responsibility and support is all of us, to set achievable yet impactful ESG standards to meet, and at the same time help those who fall below the requirements to improve. So supporting suppliers with capital and liquidity is critical. The right mixture of support and incentives would be essential. Compelling propositions include offering approved supplier status to those meeting the highest standards, which can be used as impactful marketing tool for their business. One option, which is kind of a really increasing and it's getting more kind of a wider adoption in terms of trade finance product, is offering a more favorable price under a supply chain finance program to those suppliers who meet sustainable performance standards in comparison to those who fall short. Businesses are realizing the value and the wider societal impact. I think this is the greatest economic transformation in our lifetime, and because it impacts on every single industry sector, and nobody is immune from this. So thank you, Julia.
Thank you. I have another question for you, Sibel, if you don't mind. I was having a look at green trade finance, and I was wondering if you could give us any input, and even perhaps Ms. Grech can give us about some information about the uptake, if it's actually available in Maltese banks, if that would be of interest to you.
Yes, absolutely. And I think we're going to circulate some of the slides, and there will be more explanation on each product. But for the benefit of discussion, I just want to highlight that as HSBC, we have enhanced our trade finance offering to meet green trade finance, or if you will, to kind of make it eligible. So if we're talking about again, one of the key products, and I think relevant to Malta as well, guarantees, performance guarantees, advance payment guarantees, the bonds and the guarantees in your business. How can we make it a green facility? How is that eligible? And what purpose are you what is the transaction, the underlying transaction? How are you intending to use that? So how can it be a green guarantee versus a normal guarantee? So that's one thing that we have established for each product, including receivable finance, supply chain finance, pre-shipment loans, trade finance loans, so across the whole chain, which is actually aligned to LMA, Green Loan Principles, and it's really kind of a clear KPIs and eligibility criteria. So those are all available, and we can kind of look into deeper later on with the slides of the product details.
Thank you. I don't know if Ms. Grech has anything to add to that.
No, not much to add, because I think what I would say is that these products are available locally. We are providing the same products as the rest of the HSBC group, and we'd be happy to speak to customers who are interested in this space.
Okay, thank you. Mr. Blacklock, I turn to you. Do you have any practical examples of how customers have saved money? Maybe we need some practical tips how to make it achievable.
Yeah, sure. I mean, fundamentally, if you're wanting to lower your carbon footprint, lower your energy intensity, reduce waste, a lot of that comes down to reducing your inputs, which automatically lowers your costs. An interesting example, one of our hotel customers said that they lowered their energy costs by around 25% simply by asking their guests to hang up towels to dry, asking them to forego daily sheet changes if they're staying in the hotel for a long time. And it's these small steps which have big impacts. I think the same hotel also cut its water bill by something like $18,000 a year just by adjusting and reducing the flow of water through the showers and the other water taps and things. So small steps can lower your costs, which has a immediate tangible impact, as well as, of course, lowering the harm to the planet. I mean, a lot of the large corporations you see now are making very big steps towards this. Google has committed to running all its data centers on renewable energy. They've just started developing and building their own renewable energy generation capacity, and they say this has already cut their energy bills by 10%. Another example for an airline, clearly anything you can do to reduce the amount of materials inputs will lower the weight of the plane and reduce fuel costs. So I think even things like using thinner, lighter paper in the in-flight magazines adds up. I think one airline, I think it was United, for example, said that just by adjusting the weight of their magazines reduces the amount of trees that need to be cut to produce the paper, but actually lowered fuel costs by around $300,000 a year. And a number of similar steps like this, I think, has cut their fuel bill by around $2 billion a year, which is an incredible amount. So there are very tangible steps that you can do to lower your impact on the planet, and these will have an immediate impact on your profitability.
So just let me get to another question. We want to take steps towards sustainability, but we don't want to invest too much resources, too much of our time, too much of our budget. Do we have an answer for that? Maybe Ms. Rahman can take that question.
Sure, I can have a go. I think for any organization, it's really doing a materiality analysis, right? It is a time-intensive process, but as I referenced earlier, it has to be a thoughtful process. So as an organization, and that support has to be there from the top, you need to identify what are the critical areas to business continuity and to your success. And how does that align to your commercial imperatives? And only if you can apply a climate and sustainability lens to your commercial outcomes and priorities will that be, I guess, an area of focus that will stick going forward. And also get that support from senior management and the board, because at the end of the day, you are talking about overall success of your organization. I think many things need to be considered when you're looking at a materiality analysis. You need to look at your strategy, the incentive structure that you have, your product and service composition, what your regulators are asking for, and what the future of that regulatory environment might be, as well as your supply and value chains, as well as your financial requirements. So I think there is no shortcut, if I could be completely honest. You may not want to spend too much time or money or resources, but at this juncture, if you do want to do it properly, you will need to.
Well, as usual, you know, good things take time and money and resources. Otherwise, it's just a mess. So I do appreciate your statement there. And we got a question from the attendees. Disruptions in supply chain are creating huge uncertainty, which certainly temper on long-term plans. How would you suggest addressing this challenge to match investments with sustainable returns? I'm not sure if maybe Ms. Sirmagul can answer this.
Yeah, absolutely. Yeah, so we've seen this past year. We've seen this a lot. It's you know, from just in time to just in case. There was a massive disruption in supply chains, and we've seen the concepts of nearshoring, onshoring. You know, bringing it back to home, China Plus strategy, how you can actually diversify. Even the very large corporations actually kind of the visibility below the tier 1 supplier base is actually not that great, the transparency and the visibility. So it was another wake-up call, I think, on sustainability agenda. And I do agree that maybe the very first step is to try to get the supply chains right and resilient. But I don't think they are separate kind of activities, or they are integrated from each other. So while you are actually, as a business, looking into your supply chain, supplier base, visibility, and diversifying the right kind of a supplier base, incorporating ESG into that is, I think, to me, it's in this day and age, it's coming a bit more natural. It's every supply chain finance discussion we're having. It doesn't even have to be about financing, but it incorporates the well-being and the kind of how the supplier can develop. And again, I think the point I agree here is we may not be able to do everything at once very quickly. It's kind of a step approach of what is the most critical. If it's a textile sector, what is the most critical investment that needs to be done today versus infrastructure or logistics or you know, transportation, the high transition risk sectors versus the low transition risk sectors. So we have to, I think, prioritize, and we need to help the suppliers on that journey. And like I said before, they have other priorities, and how do we get into the smaller suppliers to kind of survive the pandemic while also sticking to the ESG agenda.
I don't know if anyone has anything to add to that. No, right. So just moving on, what are the potential risks of not incorporating more sustainable models to my business model? On the one hand, you can explain rewards vis-a-vis challenges. So like to in order to incorporate sustainable business models.
Maybe I can start if Sabrine wants to add, or anyone. I think again it's judging from some of the Q&A questions here and the poll, I think we have a really well informed and educated audience here. There are greater risks. I think we are kind of aligned on that. Businesses do exist to create value, but what constitutes value is changing and continues to evolve. So it was in the past, it was a bit more narrowly measured in terms of profit, but now it's broadened to capture total shareholder return as well. Today, the way we value is defined in a much more holistic way and increasingly incorporating the full financial, social, and environmental impacts of business, from sourcing to production to disposal of your everything that you've used in the process. The time and pollution and poor labor conditions were seen by companies and consumers as the price of doing business no longer exists, and consumers are much better informed, and they are increasingly demanding ethical products from companies. All companies, regardless of where they stand in the supply chain, they're not exclusively responsible to their shareholders, but they're responsible and accountable to society, and they need to kind of be part of the development of sustainable markets. To my earlier point, economic development and recovery in this kind of a post-pandemic environment and sustainability go hand in hand. It's just much more linked to, much more inclusive and linked to the economy. So from a trade perspective, large companies are now setting minimum standards below which they will not work with a supplier. So I think that's that's a big risk. ESG-linked supply chain finance programs play an increasing role in supporting corporations looking to strengthen relationships with their suppliers, whilst at the same time incentivizing sustainable behavior across the supply chain. This is now a real obligation from businesses to drive the change that's needed. As buyers, there's a unique position to drive real, meaningful global change, and this is where the progressive supply chain management can play a huge role. And sustainability credentials are actually an opportunity to win new business as a reward, rather than simply meeting a regulatory requirement as a tick box kind of exercise. So the pressure of not investing in sustainable infrastructure will impact the competitiveness in the future. And integrating ESG considerations into business helps with the stakeholder rebalancing as well. We have a new generation coming, very environmentally and socially conscious customer base, and ESG credentials are now required to secure a buy-in to a company brand. It's kind of your brand, even if you're not in the kind of a consumer or retail sector. For younger generations, this has become personal. It just threatens to affect their lives directly, and as well as their kind of the next generation. I've seen younger people taking a stance against some of the especially again in the consumer and retail sector. They're much more aware, and they are like activists, right? They make their choices known. So demonstrating a commitment to ESG can also help securing buy-in from, as Sabrine mentioned in the very beginning, from investors who are increasingly aware that ESG factors represent material risks that must be managed. I think a strong ESG story will help companies meet and exceed investors' expectations while improving access to finance in the capital markets.
Yeah, thank you for that. It's obviously important because we're very vivid on how important marketing is to a company and how that company markets itself. So it's also important from that aspect and corporate social responsibility. So, yeah.
If I may add,
yeah,
if I may add to that, Julia, and another factor that some companies are finding, that it also helps them to attract, aside from investment and growing business and all the other things that we've mentioned, it's also attracting talent and retaining talent, because in the same way that consumers are becoming more aware of the need to have sustainability built into your way of doing things, so do employees, especially the younger generation, who are, as you really well said, Sibel, far more aware that this is going to happen within their lifetime. Otherwise, the planet is going to run out of resources potentially within their own lifetime. So they're very much more aware than perhaps older generations. So the talent retention piece is also key.
Yeah, I don't know if Ms. Rahman has anything to add to this.
No, I think my colleagues have done an exceptional job, but I think it just highlights, what we've all said before, that it's not an easy journey. It's not a straightforward journey, and I don't think any organization, and especially not us as such a large organization in over 65 markets, that one size will fit all, that we can make a change overnight, but it doesn't mean our commitment isn't there. It doesn't mean that we aren't having the right conversations. Pivoting any organization, especially a large multinational, is like changing the course of a large ship. And I think, as Sibel mentioned, we do have an educated audience. They would understand the complexity that brings, and the regional variances that brings when it comes to engagement with policymakers and with our clients, who themselves are facing these issues. But that's the spirit of collaboration that needs to happen. You do have internal activists, colleagues like myself, like Sybil, like Joyce, who understand that we need to do this. But pivot, change does take time.
Now that you mentioned that, like you said, there are some people who really, really believe it, but there are others who really, really don't. So if you are in a company and you would like to take on a sustainable business model, like, is there anything you can do to convince someone who does not want to have a sustainable business model? Like, is there any way to convince them?
Is that for me, Julia?
If you want to take it, you can take
sure.
it. If anyone else wants to take it.
I can start because I've worked in this field for over 15 years. And I think when I began, and this was before my time at HSBC, it really wasn't a very sexy topic. It wasn't a topic that had the attention of your board members or your executive management. And I think the pivot that I've seen, or the journey that I've seen, is that sustainability and sustainability practitioners have become a lot more cognizant of how we need to demonstrate the value it will bring for our organizations, and then by default, the impact it will have on our broader communities and the environment, and being able to quantify the risks and being able to price that in to how we as an organization manage it. So I think, if you are that internal activist, you do want the attention of your CEO, you do need that budget signed off. Articulate your business case. Articulate it in a language that the rest of your organization understands. Be able to share what your peers are doing. We are at a point in time where I think there's going to be very little dispute anymore. I think it's just, you do need to bring people along in that journey to enable them to understand where you're coming from. So I think there's a big capability and educational piece that needs to happen, because it can feel very overwhelming as a concept, as a construct, as a topic. But it's really about breaking it into bite-sized pieces, ensuring it's aligned with where your organization is going, and being able to continuously champion it through all the different governance layers. I'm not sure if that's a straightforward, actionable way. It takes a lot of persistence.
It's definitely straightforward. It's just, it takes a lot of work. And some people, I think, might feel like they need to give up just because no one is listening, and it takes them a while to actually listen. So I don't know if Ms. Grech or Ms. Shermagul, you seem to have had something to add to that.
No,
Yeah.
I just wanted to say what Sabrin said about it, absolutely true. I don't think there's any dispute anymore. It's just how do we, first of all, how do we help the businesses to understand where to start? It is a tough journey. What are the KPIs? What are the external agencies? It's actually complicated matter if you are depending on your sector, right? Which, there's lots of to read, lots of to comply with and to be eligible. Maybe there is a cost in the beginning when you engage with the external agencies and consultants and advisors to get there. So that understanding and how the financial institutions can help the corporates. I think we are in a better place now that we are convinced on the topic, but we need to agree on how to move forward. And it's going to be a long journey, but I think there are really kind of small steps being taken. So it's promising.
Yeah, maybe one thing that somebody might do is actually show what the company is doing, because when you're a director sitting in a boardroom, many times you don't know how much, for example, waste is being generated by your company, right? How much plastic packaging. When you actually show people how much is being produced and that there is a way of doing things differently, that other companies have done it, and it has actually paid off from a cost perspective. So it's a win-win. You might need to invest some time in it. You might need to invest the management time to change practices, but ultimately in the long term, or perhaps even in the medium term, it will pay off because other companies are doing it. Other companies are, even on a small scale here in Malta, I know companies who have done it and they've become so energized about it. And it has shown that it's saving them cost rather than adding more cost. The world has moved a lot in the past few years. There are always new products coming on stream that are less demanding on the environment, and there are various kind of ways in which you can find out what other companies in the same sector have done, as has been referenced by my colleague. So the information is there. Inform yourself, find what is relevant particularly for your company, and make a very credible case and a case which illustrates what it means for you, rather than keeping it in a very broad, high level.
May I add something to this?
Sure. I was going to ask you, Paige.
Yes, because this lies in fairly and squarely with what the Chamber of Commerce has been doing over the last couple of years, especially last year in the thick of the pandemic. There's nothing better than business leaders, CEOs, and managing directors and owners who need to take the right decisions, and then the rest will follow. Because, of course, most of our businesses in Malta, in tiny Malta, most of businesses are small to medium. Of course, we have a few large organizations, but for all intents and purposes, our businesses are small to medium. It's not easy for a busy organization, maybe really worried about what the business is going through right now, to understand, decide, be inspired, if you like, by what changes need to be made in order to become better. And of course, the word business plan is the term that we have been using ever since July of last year, when we thought of a sustainable recovery of our economy during the pandemic, let alone after the pandemic, needs to be driven by those objectives that are truly going to make a difference. Digitalization, good governance, but the zero carbon economy and therefore climate change are central to that. And of course, because as I said, businesses are small to medium, they need help. And normally, to be able to think outside the box, you either need to be inspired to think outside the box, or you need to get an external to help you do that. And that's why we have lobbied with government to be able to put funds available that would make this ability, this ambition, this possibility a reality. We will struggle because our businesses are small to medium. It's not because we probably don't understand that this needs to happen, but we need to be inspired by what changes we really need to make to be truly resilient and sustainable, have businesses that are truly sustainable. And there's nothing better than the famous business plan that gets you to ask where we are, where we need to be at in 10 years' time, in 5 years' time, and therefore devise all those changes, all those upgrades, all those investments that will take us there. And therefore the banks and overall even the expertise of the banks and HSBC in this case, who are seeing what is happening in the various areas of the economy, who are able to also to help in that inspiration process. Only just an aside is that, of course, the proposals as put forward by government in incentivizing business to carry out these business plans, although positive, are not strong enough. And what we're going through right now is to make this ability to hive off funding in order to be able to sit down with the experts and being able to truly, honestly, and genuinely ask what is wrong, or what is wrong with what we do that should be removed, that we should remove, what is good but could be better, and what are those other things that we have never thought of that we should move into. And certainly the zero carbon economy and climate change, and away from fossil fuels, away from carbon, away from waste, away from the misuse of resources is the way to go. And as everybody rightfully said, then the financing, the investors, the clientele, the stakeholders, certainly the customers, will just align to the ability to strengthen that business, and therefore the profits, and therefore everything else that follows. This is really the right time to do all this.
Thank you, Paige. On this note, we do have a question that is sort of related, which I think you can also take, considering your experience lobbying with government. So implications on green initiative take-ups are time sporadic in their nature, coming from various fronts, or not effectively supported by the macro policy level perspective. What do you think is missing by government-driven policy on initiatives such as these?
You're asking me, Julia?
Perhaps if you can give anything from your feedback lobbying with government.
Yes. By all means, I'll be short then, because maybe other people have other opinions. Certainly, I think very few people understand what climate change truly is, apart from the melting of the ice caps and maybe the rise of water. I don't think very few people understand what climate change is truly about, and that the moving of people and the ability to have quality of life could be a shortcoming. Certainly, when we talk about zero carbon, we talk about dust in the air, and really do not understand what a zero carbon economy truly means in transport, in construction, in manufacturing, in services, in tourism. So certainly we need the best brains, the best gray matter, of course, the best academic experience that gets us to understand what we truly need to be doing as a planet, as continent, and as a nation, and ultimately as a small business, to be able to achieve the target of net zero carbon by 2050, or reduce our carbon by 55% in 9 years' time, in 2030. That's no joke. So we should have KPIs. If the countries were businesses, we should have KPIs that we would be able to measure progress year on year, or quarter on quarter potentially, to be able to make sure that we achieve those targets. So our major worry, if you like, is our inability to understand what the true ambitions of climate change, and therefore what a zero carbon economy truly means. This is where we think are weak, and we need the best brains, the best academics, the best professionals to be able to patch it out together, as I said, as a planet, as a continent, as a country, and ultimately for each and every one of our businesses.
Thank you. I don't know if anyone else has anything to add. Maybe Sibel to that.
Sorry, just got. No, I completely agree. I think it's the starting point is sometimes, even for the large corporations, it's just to know where to start from, how to qualify, who to engage with. There are so many agencies out there, right? There are so many external parties. How do you choose the best kind of a partner? We as a bank, when we work with customers, their agencies verify their KPIs. Are we comfortable with that third party? How can we be more comfortable with those people? We know the audit firms, we know the consultants. This is a new sector now, lots of players coming in. So we need to be careful. I think we need to be careful with greenwashing as well. So yes, it is it will require, like the previously, like the digital agenda, it will require the players to work together and to collaborate. It's not just the banks, but the regulators, companies and agencies to collaborate and to help this ecosystem. I don't see it too different than the digital kind of ecosystem, at some point obviously overlapping even together.
Sure. I don't know if anyone wants to add anything to that. Just going through the questions. Let me just give me some time. Okay. So there was a question regarding sustainability and its practicality. I think the commentator was more viewing from a very practical aspect on the steps that one should do in order to start this process. I don't know if anyone can give a very brief overview in its practicality when they go to the bank and what happens thereafter. Maybe Ms. Grech can take this one, since
I can maybe start answering that.
Of course.
So I mean, I think the starting point is that any kind of sustainable finance facility, it works in the same way as an ordinary financial facility. I think what the banks want to do is to direct funding, direct capital to the projects and companies that are moving towards a net zero economy, or taking other meaningful steps to deliver ESG goals. So really what what we're concerned about is understanding in depth what the project or the business activity is, or what the wider corporate strategy is over time, and then seeing how we can help our customers and our clients achieve those goals. So really that it comes down to having conversations and spending a lot of time understanding in detail what the proposal is. Generally speaking, that there's two broad approaches to sustainable financing. One is looking at specific activities, specific projects. So it could be something fairly large scale, like the construction of a renewable energy facility or a battery factory, or it could be smaller scale, such as purchase or trading in fair trade produced coffee, something like that. And in those cases, we would look to understand exactly what makes this activity beneficial, what it differentiates it from business as usual, and to agree with the client a methodology in order to measure that and keep track of progress, keep monitoring the improvements over time. And a similar approach is looking more at a company's overall strategy. So I think we've talked already about the challenges companies face and how they can look at their business operations overall and what they can do to progress. So we would work with them to set out a strategy and really boil that down to a few key performance indicators, a few key measurables. And then you can build a longer term goals, measure them and track them, and perhaps reward or incentivize the customer if they do meet those goals by adapting the financing to that, perhaps by slightly adjusting the cost of funds if they're achieving their sustainability goals. But the first step is to set out your ideas, be clear about what you want to do. Usually we will work with other parties. The bank as a whole is taking the first steps on this journey, so we won't have knowledge to validate every single project in every single business sector. So we do work with experts and consultants in many different fields to help us really understand the proposal and make sure that it is doing what it says. I mean, there have been cases where activities have been branded as green when in fact they turn out to be not as beneficial as they claim. So banks are a little bit nervous about that, so that the due diligence process really is important.
Ms. Greg?
Yeah, I think what Hugh just said, I find this really key, because some people might think, oh, I don't have any projects, I'm not going to build a large solar panel farm, so this is not for me. That is only one side. It's the KPI piece, and having a plan and having a number of initiatives which lead you towards achieving those targets. That is equally important, and that's also an area where we can help. And in fact, probably there will be more companies which go down that route rather than having a large-scale green project, because many companies will just have their existing operations and will want to gradually transition to a more sustainable way of operating. But they'll be able to show that they have a plan, they have KPIs, and they're working towards achieving those KPIs and improving their scores, as it were.
Yeah, speaking of KPIs, do you look for anything in particular as a bank? Do you, like in a business plan, so if I'm a company and I'm drafting my business plan, do you look for anything in particular that would make us stand out?
I think the first thing we consider is that it has to be a material, it has to be an ambitious change. Business as usual is no longer acceptable. We as a bank and we as a society have to keep pushing forward. Some people use the term now, climate emergency. There is now a real sense of urgency, and the need for change accelerates as things get deferred or delayed until later. The need to move faster increases. So it really has to be stretching. I think that's the first thing we look for. But having said that, there are now a lot of emerging standards. So the Sustainable Accounting Standards Board is setting out a lot of KPIs, a lot of suggested ways of measuring various different activities. Often, as clients sign facilities, a common standard emerges. So banks and investors can kind of benchmark one project against another. And also now we're starting to see regulators paying much closer attention, particularly the EU now is starting to draft very well defined standards, and interestingly they intended to be progressive standards, so they expect that the thresholds to get higher and higher over time as new technologies allow us to achieve more. So that there is quite a lot of information out there, and again, we as a bank can help you kind of work out what is most important for your company. But of course, business owners know their company's best, and so it's always a two-way conversation to understand.
Okay, so don't know if anyone has anything to add to that. Nope. All right, unless there are any other questions that you would like to make reference to, I think I just want to go into sort of a concluding framework, and perhaps you can also use this as your time to sort of reflect on the webinar, even on the poll as Sybil did earlier on, and maybe just a take-home message. Just I'm going to go in order of my screen. So starting with you, Mr. Blacklock, since you're already unmuted as well. So just the take-home message for all our attendees today, what would it be?
Well, this is clearly something that affects us all. It is as Sybil, I think, said earlier, it is no longer something that's just the preserve of a few. It is something that affects us all, and increasingly we're seeing this in our daily lives. I mean, I know I'm older than some, but certainly I've noticed that weather patterns have been changing. The animals I see when I go for a walk in the countryside are different, and that's really brought it home to me. So I think it is very clearly something that we no longer have the luxury of ignoring or pretending isn't happening. But the flip side of this is that the things we can do to react to this, to respond to this, to affect change for the better are more and more. I mean, an obvious example is the huge growth in renewable energy technologies, in electric vehicle technologies. So, the cost of renewable energy is now, without subsidy, at parity or below the cost of old fossil fuel generation in many countries around the world now. So there is hope, for want of a better word. We are slowly, as a global community, responding and reacting and changing, and we're all doing all we can to keep moving. But it is a difficult journey. There's lots of moving parts. It is very complex, and it will take time, and we have to make sure that we don't cause inadvertent harms along the way. We have to move steadily rather than rush into things, but it is something that is hugely important to all of us now.
Thank you, Mr. Blacklock. Maybe we can go to Ms. Sirmagul next, please.
Thanks, Julia. I just to kind of add on again, it is, I think it is a long journey. I agree, and some of the questions came up with, how do you balance that investment versus return? I think we need to be ambitious, but at the same time realistic on what we can achieve in a period of time. And I think it's for every business to identify what is the most critical kind of investment, where to start from, and then to banks, whether commercial banks or development banks are already kind of doing a lot in this space, to work together on that phased journey. And I do appreciate that we won't be able to change the entire operating and business model on day one, but I think if there is a clear path and a plan to the future, and I think we can work together to get there. I think the banks are looking into these business plans, trying to help and understand where we can extend financing for that investment. I think new technologies coming in, they cost money, obviously, and you need maybe different financing schemes to buy that new technology for your business. So this is where I think we kind of come in as well to help the businesses. So I think it's going to be a ambitious but gradual journey for all of us.
Yes, thank you for that. Ms. Rahman, I think it's time for your intervention now. So,
sure. Yeah, look, just to end off, I think we are at a tipping point. I think, as we've mentioned, COVID was a huge wake-up call on the interconnectivity of our economy and our society, and we've seen the trillions of dollars that have been lost just over the course of a year because of a large-scale biodiversity crisis. There is no vaccine for climate change, so we have nowhere to hide. So let's keep that in mind. I think every organization, every government is taking this seriously, much more seriously than I've ever seen it before in my career. I have the privilege of working with many policymakers, and I was a part of the G20 summit representing the financial sector here in the Middle East. And it's such a fundamental shift in the narrative that we're seeing. So it gives me some hope, not enough, but it gives me some hope that we are all learning. Hopefully we won't repeat the same mistakes, but I think it has to be consistent, and we have to be more solutions oriented than looking at the private sector as a source of problems, because we have the skill sets, the reach and the capability to solve many of the issues that are facing us.
Yeah, thank you. Thank you so much for those words. I'm just going to pass on to Ms. Grech for her concluding remarks, please.
Thanks, Julia. I think the only thing I would add to that is that locally we can hide behind the fact that we're so small, right? But if everybody were to do that, you know, everybody has a reason why not to do it. But in reality, there are very compelling arguments why to do it. And the most important of that is obviously that the impact on the planet is not something that we can ignore. We've all seen the documentaries, we've all seen directly the impact of climate change. So I think the call to action is very, very clear. I think hopefully today we've just touched upon some of the things that people can do. And I think you made the point really well that first you need to understand where the main impact can lie in your particular organization, and nobody can do that better than the company itself, because they know their own operations, and to have a plan. If you don't have a plan, you won't be able to track progress against it, and you won't be able to achieve and move forward. And we're here to support along the way. So there are so many compelling reasons to do it. The cost piece is one of them, but I think it's almost an existential issue for many companies, because if they don't do it themselves, they'll have an imposition either by authorities eventually or by through the supply chain for them to do it. So why not show that you're on the front foot and you're thinking about it yourself, and can plan and fit it into other activities.
Yes, definitely. Let's drive consumer demand. Let's not let it drive us to a certain extent. So I do get your message. Perry Chwirep, 2 years as president, you've definitely probably given advice to some companies on sustainability. I was hoping you'd take your concluding remarks on that level before we close off.
Okay, I don't want to add much more. There was so much being said, and the quality of this webinar was very, very strong, very, very tangible. Ultimately, business is what needs to lead the way. Business leaders, probably most of the audience with us this afternoon, we need to be impactful. And to be impactful, we need to plan and change what needs to be changed. And the time is now. It cannot be tomorrow. It will probably be, we'll have lost the bus. And then our competitivity between one company and another, or between one country and another, would certainly have lost the bus. So my appeal, as we have been doing as a chamber now for the last number of years, is to take the bull by the horns, proverbially, and carry out all those changes that need to be carried out. However, we need help. That is, we cannot be thinking outside the box on our own. We need to be getting people to ask us difficult questions to understand what changes, what step-by-step changes we are to implement. We can only be impactful if we truly are driven by the values that will lead us. And the signs of the times, the writing on the wall is clear. We have heard all the experts talking to us today. The signs of the times are clear. We just need to make sure that the sustainability of our business is driven by those signs. Thank you so very much for joining us. In your hands, Julia.
Thank you very much, Perry Chwirep. We're getting some very lovely comments on the chat thanking us for today's session. I would just like to thank you all directly and thank you for being with us today. I'd like to thank you once again, all the way from Dubai, London, and also Malta. Thank you so much for joining us. I do hope to have you back with us sometime soon. Sybil, third time is always a charm. And Ms. Rahman and Mr. Blacklock, I hope we can see you soon as well. Ms. Grech, it's obviously been a privilege for us to have you as well. I would like to give everyone a good afternoon and a good evening in Ms. Rahman's case. Thank you for joining us. If you have any questions, feel free to drop us an email. I will be sending you a presentation that Ms. Sirmagul has so kindly provided that will give you more information on today's webinar. And also I'll be forwarding you the video of the HSBC vision and mission for you to share, for you to send to all your colleagues and friends. And I hope that it inspires you moving forward. Thank you very much once again. See you.
Thank you.
Thanks.
Bye.
Thank you very much. Bye-bye.
Thanks a lot.
Bye.